Hello guys, welcome back to another lovely trading video. In this one we're going to be doing breakdown analysis on MRM, which is today's leading gap at 73%. So to get straight into it, we'll go straight into the daily chart, see if there's any gaps, and as you can see the only gap we really have is the gap created today, so that will be the fill we're looking for between $11 and $7.50. So we can quickly, I guess, throw this onto a 1 minute chart so we can come back to this once we've plotted support and resistance. So we'll now be using standard deviations as always, and we can start seeing where is it going to be going, or kind of what area it's in. So you'll be able to see, and if you watch these videos before, we say it's very unlikely for stocks to go over the fourth deviation because that is extremely overbought. And as you can see in this case, it did come up to this fourth deviation, kind of broke through, but came straight back down. As you can see, it stayed out for maybe 10 minutes before fading down, retesting and failing, which is usually what you expect to see with these kind of moves. And since then we've come and closed below the third deviation, and what this does tell us is most likely this will now be the end of its upward move, because with the third deviation, that's usually the key one you'd be looking at. If it can close below, then it usually signals that it's going to be weak and then it's kind of finished its move. Otherwise, if it taps off the third deviation and continues upward, then it usually indicates it's going to break through at least a 52-week high, or at least break the previous high of the previous day. So that is good news if you're short bias on it, that this move is most likely done, because it has now closed below the third deviation on both the 4 hour and the daily. So then the only other things we'll be looking at now are deviation levels to see where we're most likely to see bounces, or maybe even an end to the move. So for bounces, we're likely to see them at this area here, as we did kind of intraday today, because that is the second deviation, and also second deviation, so you're likely to see a bounce off there. But as it's closed below the third deviation, you're likely to see a bounce, but it's most likely not going to close back below the third and instead carry on down. So we'll most likely see this now head towards the $8 mark. And again, if we're on the longer term time frames, those $8 marks are the first deviations. Again, what will probably happen off this is the same reaction to the second deviation, where we get a bounce off this, maybe a 10 or so % bounce before continuing down, and then we would be looking for a move kind of back to fill this gap at 741. Once it comes to 741, the move is kind of complete, and there would be no point really looking at this stock until it creates a new gap. But if you were looking to short even further than the gap fill, I would only really be looking for the statistical mean, just because it's not a stock where anyone really trades, as you can see by all the dead momentum, unless it's got some kind of gapping reason. So that's it for the breakdown on MRM. Hope that was insightful, and that's it. Peace.